Good afternoon. This is Manuel Vargas with Keller Williams Realty Landmark 1 and 2 in Queens. And today I wanted to share with you what happened with the real estate market in Queens during the second quarter of 2021 this year. First, let me start by giving you some information about the economy at a national level. GDP was 6.5% adjusted for inflation, which is higher year over year. That means the economy is recovering, and this is due in part to several factors. One is the massive stimulus that the federal government is providing. Then the low interest rates that are stimulating businesses to borrow money and expand, and then the distribution of COVID vaccines. This also is helping the economy to go back to normal. So GDP, very positive news, at 6.5% higher than last year, adjusted for inflation. Okay, let me talk to you about interest rates. Interest rates ended up the quarter at 2.8%, around 2.8% for a 30-year mortgage, which is extremely low, and it's great news for the housing industry because it promotes affordability. Now, there was a period during the quarter, like at the beginning of the quarter in April, where the rates were inching up a little bit, going up to 3%. And I would tell you that the buyers were a little more hesitant, and the housing boom that we were starting to experience in Queens slowed down. That shows you how much of this housing boom and real estate appreciation trend is due to the low interest rate environment. Now, going back to the national environment, the national level, these low rates are supporting very, very intense appreciation trends. The median home price at the national level was a record $363,300, right? Now, this is not only due to low interest rates, this is also due to very low inventory. So the record prices and the sales levels were at 22.9% higher than the previous year, than June 2020, are due not only to the low interest rates, but also to the low inventory levels, right? At a national level, inventory was at 2.6 months of inventory. Now let's remember that anything below 6 months of inventory is considered a seller's market, meaning less properties for sale, give sellers the upper hand in maintaining, sticking to their asking price, not having to negotiate price and terms, and getting additional beneficial terms as move-out dates, selling as is, etc. So definitely a seller's market at 2.6 months of inventory. This explains why people are paying asking prices. This explains why there are bidding wars. This explains also why people are making offers over the asking price, waiving inspection contingencies, and waiving even appraisal contingencies. This is starting to expand to Queens. At the beginning, this trend was more common at the national level, even at the end of 2020, and Queens was not yet recovering. Now we have to say that Queens is starting to experience a little bit of this sellers market, bidding wars over the asking price, non-contingent offers at the second quarter of 2021. Why did it take a little longer in Queens? Well, let's not forget that we are a very densely populated county where a lot of people live in close quarters, in apartment buildings, or in multifamily houses. I do a lot of multifamilies, and living in two, three, four family houses is very common in Queens. And the pandemic ravaged Queens because of this living in close quarters. So it took a little longer for Queens to recover and enjoy the boom that the nation was experiencing. Also, with that came, with this situation of multifamily living, came a crisis because some tenants and some homeowners couldn't pay the rent, and or couldn't pay the rent, and some homeowners couldn't pay the mortgage. Now there were moratoriums for evictions and for foreclosures in place up to now, and that kind of lessened the effect. But the moratorium of evictions, while it benefits tenants, it does affect small landlords disproportionately. I do a lot of business with small landlords and first-time home buyers who become small landlords, owners of two, three, and four family houses, where the tenant not paying the rent is a big crisis. So we'll see what happens when these moratoriums expire. Right now, there is a case at the federal level in Supreme Court. There are also cases at the New York state level. But the crisis is impending because New York housing courts are notoriously slow to resolve issues, and there is going to be a log jam of cases when these moratoriums are lifted, and small landlords are going to be at the losing end of this equation. Also, the rental aid that the federal government had apportioned towards tenants and landlords is not being distributed as it should because of logistical problems, complicated applications, and or you know very lack of personnel at the municipal or local levels. So yes, uh, bidding wars, strong appreciation, but Queen's a little slower on jumping onto this bandwagon because we have multifamily housing in Queens, and multifamily housing is experiencing some other challenges. Now, residential construction continued to improve at the national level, but it's interesting to note that permits ended up lower at the end of the second quarter of 2021. The reason being is that materials went up in price. Materials are experiencing inflationary measurements, not only because of the economy being heated, but because of housing picking up and because of new construction picking up. So supply constraints and inflationary pressures for materials are making a dent on new permits. Now, the jobs report for the second quarter of 2021 at the national level was very encouraging, showing that unemployment went down to 5.9% nationally again. One sector that was that improved a lot, that was very encouraging, was leisure and hospitality, because with the reopening of the economy, with the return of this new normal, a lot more people started traveling for leisure and or business. Now, with many workers not ready to go back to work, the wages went up 3.6% year over year. This is at the national level. At the local level in Queens, the picture is much more somber, with unemployment improving and going down, but it's still ending up at 10% of unemployment in June. It, this is worrisome due to people, perhaps being afraid of getting back to work, and also because many businesses are not able to reopen yet because a lot of businesses still remain closed. A lot of them are reopening, but some others are not. The economy has shifted, especially real estate, retail businesses are affected, and many other businesses are affected because people are doing business in a different way. Um, Also, there is some commentators are saying that because the unemployment benefits were extended through September 2021, this is keeping people from going back to work and keeping unemployment numbers unofficially high. But in summary, uh, Queens is lagging behind in reducing unemployment as compared to the nation. Now, we already spoke about the eviction and foreclosure moratoriums, where I believe small landlords are at the losing end. And, you know, this is a lot of my clients in Queens. Queens uh, is very common to find in Queens multifamily neighborhoods. Tracks and tracks of neighborhoods are two, three, four family houses where the landlords are not big companies or big building owners, are small landlords. Now, there is something that we talked during our analysis of the first quarter of 2021, something called the New York City Recovery Index. It's basically something published by Investopedia, and it measures COVID hospitalization levels, unemployment claims, pending home sales and rental inventory, and subway turnstile counts, and open table restaurant reservation. All these measurements are summarized in what they call a recovery index. According to them, New York City is back to normal, to a 70% normal level of normalcy, which is encouraging. Now let's dive into the Queen's real estate numbers, which is my expertise. I've been working in real estate 26 years, and I do look at inventory, price appreciation, and I break it down in property classes. I think for Queens, it's key to understand that the market is quite different for one family houses, for two family houses, for small multifamilies, three and four family houses, and for apartment units, co-ops, and condos. So I do this breakdown for you, and here we go. Now, inventory levels in Queens are also decreasing, but they are not at 2.6 months of inventory like in the national market. We are in Queens at the end of June at 4.8 levels, 4.8 months of inventory. This is a seller's market, but this is a moderate seller's market, closer to the 6 months of balance of inventory, which is a balanced market. This is why we are just starting to experience offers that are like asking price, over the asking price, etc. It's a seller's market, but it's a milder seller's market when we compare it to the seller's market happening all around the nation. Now, this is again due to the type of real estate that we have. Again, a lot of multifamily inventory, right? So this property moves a little slower. There were restrictions to show this property. There are tenant situations with this property. That's why we are just starting to enjoy a recovery. So inventory in Queens at a 4.8 months of inventory. Now, negotiability is improving if you are a seller, meaning at the end of the second quarter of 2021, the difference between selling price and the initial asking price was 4.9%, and the difference between the selling price and the final asking price, after some price reductions or whatever, was 3.3%. So this is good news for the sellers, but still there is a little bit of wiggle room. There is a little bit of negotiability in the second quarter, or there was a little bit of negotiability built into the market in the second quarter of 2021. We'll see what happens at the third quarter of 2021. Stay tuned for that. Now, for the median price for all residential properties in Queens, meaning one families, two families, small multifamilies, which are three and four families, and apartment units, condos, and co-ops, the median price went up 9.4% year over year, and this is the median price for properties under contract, and it was 670,000 at the end of June 2021. So the median price for under contract properties higher almost 10%, and it was 670,000 under contract properties. Now for closed sales, the median price ended up at 655,000, which is almost 20% higher than year over year. Why? Because the market came to almost an abrupt stop at the end of the second quarter of 2020. That's why the difference with closed sales prices is so acute, so intense, right? Because we were in the lockdown. But prices are recuperating, and they ended up 20% higher year over year for closed sales, and the median price was 655,000. Now notice this difference between median price of under contract 670,000 and median price of closed sales at the end of the quarter at 655,000. That shows you that basically in the last 2 to 4 months, which is the time that it takes to close a sale in Queens, typically 90 days, 60 days, but between 2 and 4 months, in the last portion of the quarter, prices are higher. Houses are going to contract almost 3% higher than they were closing at the end of the quarter. This rate of appreciation in a quarter, which would equate to a double-digit appreciation in a year, is not sustainable, because otherwise, it would be almost like an exponential curve, right? So this appreciation that we are experiencing at the end of the second quarter of 2021 is very good news, but it's probably going to level off at some point. Also, this may be accelerated, this leveling off that we are forecasting, just because the numbers cannot continue going up at 3% every quarter. This may be accelerated if the rates continue. I mean, if the rates do go up or inch up, because a lot of this market appreciation is due to low interest rates, as we said before. Now let's talk about one-family houses. As I promised you, the median price for one-family houses at the end of Q2 of 2021 was 760,000, or 8.6% higher year over year. And this goes to show you how one families was the type of property of choice for a lot of people affected by the pandemic. People going to more of private type of living, going away from shared living spaces, multifamily living, apartment buildings, looking for a space to work from home, looking for a space to teach their children, looking for a space to work out from home, or to entertain, or to have a backyard, or a swimming pool. So one family houses year over year at the end of the second quarter were 8.6% higher at 760,000. Two families also recovered to a lesser extent because of the limitation we have just explained for multifamilies, right? The median price for two family houses at the end of the quarter, the second quarter, was 950,000, which was 3.4% higher than in 2020. Now, when we go to this other multifamily homes, 3 and 4 family homes, which we call small multifamilies compared to apartment buildings, right? 3 and 4 family homes also recovered, and the sales level improved a lot. Now, with this type of real estate, 3 and 4 family homes, the statistics can be very skewed. Why? Because the level of data, the number of sales is much smaller than 1 and 2 family homes at this time. So both the median selling price and the number of sales for 3 and 4 family houses are improved. But if you look at my report online at www.topqueensagent.com, you're going to see that the statistics are all over the place. And one of the reasons is that 1 year ago, this type of property was undesirable. Nobody was touching 3 and 4 family homes because of the uncertainty of living in shared spaces, close quarters, and the uncertainty with, you know, evictions and foreclosures. Now let's talk about sales of cooperative and condo apartments. They bounced back very nicely during these quarters, not quite to the level of other properties like 1 and 2 family houses. And this is part to the fact that people are just coming back to apartments. New York City, for example, I do work in New York City, and the first quarter of this year was very slow. People were not coming back to the city. Now, at the second quarter in New York City, people did start to come back to the city, and in Queens, that meant that apartment units, condos, and co-ops started to recover nicely, almost back to pre-pandemic levels, but not quite yet. Um, so this is what I can tell you about the market in Queens that is improving, especially for 1 and 2 family homes. If you do want an estimate of the market value of your property, please contact me. My number is 917-559-2002, and we provide this as a free service. If you want to look at the entire report and all the numbers, you can just go to my website at www.topqueensagent.com, and you can look at the section of market reports, market updates, and you can download the PDF of this report, and you can also watch this video again if you want to go over some numbers. I am at your service, 26 years of experience in Queens. Please let me know any questions that you have, any referrals that you have are greatly appreciated. And I enjoy keeping in touch with my clients and with homeowners and property owners, even though you are not thinking of selling yet, just to keep you updated, just to give you my insight on the market as a homeowner, as a landlord, and as a real estate broker for 26 years in Queens and a Queens resident for 26 years. Thank you very much for listening, and don't hesitate to contact me.